Masterclass of Liquidity Concepts. Today we'll be talking about how you can identify the stop hunts before they occur and take advantage of them, basically. Swing failure patterns and liquidity as a whole is one of my favorite concepts and one of my most favorite things to make money with. Okay? Make money with, underline this thing. Because there are things that are gonna make you money and some other things that are not gonna make you money. And I believe if you master liquidity concepts, you're gonna make money in the long term for sure. And this is the most important thing. Now, this video consists of few different chapters. And the first chapter that we're gonna be talking about is the swing failure pattern. Now, in terms of basics, let me just show you two examples quickly. Example number one, basically, if you've heard the saying, wicks do the damage, body tell the story. So similar thing here. In example number one, as you can see, we form a low here on the 22nd. Then we're being range bound for 2 or 3 days. Then, while New York starts on the 24th, we do a swing failure pattern and we reverse the whole thing. And even before the drop, as you can see over here, we did a little swing failure pattern of the high over here. So yeah, example number two, on the 22nd of June, sorry, yeah, 22nd. On the 22nd, we put in this low, and then we're being range bound for about 7 days, 8 days, and right before July starts, we take out that low, and we have a nice push to the upside. Now, these are two very simple examples. I have a separate video where I have explained swing failure pattern for beginners, and basically in there you can find more information about swing failure pattern. So want to learn more about that, jump into that video. Second chapter of this video is to look at the time being spent between X and Y. And what I mean by that, let me just show you an example quickly. You always want to have a couple of hours, if not days, of accumulation of either longs or shorts for good swing failure pattern. And what you can see over here, let's say if we mark out this high over here, just show you quickly. And for Bitcoin, this is very, very good and very easy to do. If you check out, if you look at this, okay, this high here gets front run here, and everybody's like, oh, we got a double top, and all the retails that start shorting in this area, and then they get taken out, and then you even backtest this high. And where do you push down to? You push down to take out all the longs. So it's like a basic liquidity sweep, to put it that way. Always want to be looking at the time that's being spent. Always. The more time you spend, the better the swing failure pattern is going to be. Now the next thing that we're going to be looking at is the order flow checkbox. What do you want to see on the order flow? Now on the order flow, what I like to see is, let's say over here, even if we start from the beginning of this whole move, let's just come back, okay. So over here, what you can see, that's on the 30-minute time frame. This is the swing failure pattern. What you can see, if we zoom inside of the candle, you have selling imbalances at the low. And basically, if you take a look at the net shorts, they're being increasing. Net long should be decreasing. In this case, they're increasing, not a picture perfect, but as a key characteristics, you want to be having a spike in the volume and in the delta and a decrease in open interest. In this case, you don't have the decrease in the open interest, you have an increase, but it's fine. If you take a look at the next swing failure pattern of this low, what you can see is you have a decrease in open interest. And what I mean by the decrease in open interest and why is it good, the main reason for that is because you are actually exchanging hands. And when you have a decrease in open interest, basically positions are being closed. And the good thing is about positions being closed is that, let's say if you sweep, in this case you sweep people with stops below this low, and if there are markets, when a position stop is being hit, it translates into a market buy or a market sell. If it's a stop on long, it transitions into a market sell. And somebody has to be on the other side to take out the position. And basically that's what happens here. And if somebody's being stopped, they're gonna decrease the open interest because that's what it's showing. Now, moving forward, if we take a look at the swing failure pattern of the low, over let me just see which one was it, over here. Yeah, even we can look at the high first. Okay, if we take a look at the high, what you can see, spike in the volume, decrease in the open interest, spike in the delta as well, and then you even get a back test. And by the way, you do have a bearish divergence, making this a picture perfect high. Then at the low, what you can see, you have a decrease in the open interest, checkbox number 1, spike in the volume, checkbox number 2, spike in the delta, checkbox number 3. And you can always look at the net shorts or net longs. For a good long setup, you want to have a decrease in the net longs. That's a big flush right here. And preferably increase in the net shorts, which you don't have here, but keep in mind that's the 30-minute time frame, so there's gonna be quite a difference. If you take a look at the 5-minute instead, maybe we're gonna catch a difference. Now, these are the 3 simple checkboxes. Okay, moving forward, marking levels in TradingView. The way I like to mark out my levels in TradingView is first on the 30-minute time frame. Okay, that's the first thing. The 30-minute time frame is very good for swing failure patterns. But what you can do as well for good levels, what I suggest you do is take a look on the daily time frame. Okay, take a look on the daily time frame, and the daily levels of liquidity, they're being very good. Okay, now let's begin over here. The first thing that I want to mention is this low over here, which it has been swept, and the next essential place is, let's say, this week right here. It's been swept already, so we're not gonna be looking at that. We're gonna be looking at the one above. So this is gonna be our next potential liquidity sweep. And once a liquidity sweep occurs, you don't want to be looking at this place again. So let's say on the daily time frame we have already swing failure pattern this place. We're not gonna be looking at another swing failure pattern here. We're not gonna be looking for potential like this. That just, of course it can happen, but it's not the best probability in my opinion. So yeah, I try to stay away from these scenarios. So let's say over here, as you can see, this low right here and got swept. Let's say these highs here kind of equal. They get swept here and then get back tested. Let's say this high over here, it gets swept. And by the way, when you front run a liquidity level like this, when you front run it, you most of the time you just come back, and as you can see here, you make a swing failure pattern of it on the daily time frame, come back, probably back test the golden pocket, and then let's just take a look. Yeah, as you can see, back test the golden pocket and then continue downwards. So yeah, it's simple as that, and you can be marking out the levels on the daily time frame or the 4-hour. Okay, the 4-hour is very good as well. If you take a look, before this high, the next liquidity level is being right here. Okay, sweep it, back test it, move back down. Simple as that. Now, there's quite a few liquidity levels right here which you can keep an eye on. Let's say this one right here. This one is already being swept, so we're not gonna be looking at this, to be honest with you. And then to the downside, what we can be looking at is this one here has been swept. We can be looking at this one right here. We can be looking at this one, or we can be looking at some of these ones here, some of these weeks. Okay, for a potential bounce, let's say. Price makes something like this, and then it can continue downwards as well, but keep in mind you're just looking to get in, get out. You have a tight stop. So yeah, now this is how you mark out the levels, and the next point is marking out the pull highs and the pull lows on the TPO. If you take a look at the TPO chart, okay, always keep an eye for pull highs and pull lows. The main reason for that is because where there is being a pull high or pull low being left, price is being magnetized towards this area, so keep this in mind. Now what you can see here, we'll have this pull high, and over here it got front run, and usually when you have pull high or pull low being front run like that, price is gonna be magnetized towards this area, so keep it in mind. Now what you can see, we don't have a selling tail here. Then on the 30th of June you leave this selling tail and then move back down to the point of control, back test the selling tail, pretty pretty much to the door, then you have a move down. Now, why is price magnetized towards these areas? The reason for that is because when you have a selling tail or buying tail, this means this specific place, this specific spot has been sold or bought aggressively. And basically on the 30-minute time frame, these are the wicks. As I told you in the beginning, body tells the story, wicks do the damage. So yeah, for a good high or good low, you always want to have buying tail or selling tail, preferably with the 3 blocks. So let's say over here we left one with 2 blocks, so that's a poor high technically speaking. And same thing over here, we left a poor low with 1 block, and then 2 days later it gets swept. Even over here when it's front run, that's not a low. So yeah, then while New York is being on, you did a sweep on this low and on this low, and then you reversed. So yeah, always look for the bank tails and selling tails, and they're gonna tell you if a high is being good or not. And at the moment, what you can see, we have left a poor high and we left a poor high over here, so price is gonna be technically magnetized to take out these tops technically. So yeah, keep these things in mind, ladies and gentlemen. If you have any questions, just let me know in the comments and we're gonna be talking about. So always mark out the poor highs and the poor lows. The templates are inside the Discord, so if you want to join, feel free to do so. Cheers.